As the U.S. marches deeper into a recession and the global economy is teetering on the edge along with it, many investors are starting to see that their accounts are being impacted. Their retirement savings are going down, they're eating into their own savings, and their portfolios are being impacted. And chances are, if you have a portfolio in the market right now, it's leaning heavily on the 60-40 method. This is a portfolio allocation strategy that's been around for the last couple of decades, and essentially what it is leaning 60% into stocks and equities like the S&P 500 index and 40% into global government bonds. Now, those bonds are typically going to be the preservation and the safety aspect, while stocks are going to be more the growth side. And this portfolio method has been performing very well for the last decade or so, since the 2008-2009 great financial crisis. Well, keep in mind that we are in the longest running bull market in American history for the last 13 plus years, and anything has really done well. But as of 2022, we're seeing that there is some cracks in that strategy. The buy and hold method is actually down about 20% year to date. This is the worst start since World War II for portfolios. With inflation soaring, with the Fed raising interest rates, and actually officially being in a recession, stocks and bonds are dropping sharply, and it looks like there's much further downside to go, while gold and silver and real assets are actually beginning to increase in value. There's a shift in market performance right now. The S&P 500 is down about 20% year to date, and bonds, which are the typical go-to for safety in an environment like this, are actually down 11% year to date. It's really imperative that investors begin to shift their perspective, especially with that 60-40 portfolio mentality, into finding safety and diversification. Now, Goldman Sachs chief asset strategist Christian Mueller-Glissman has come out and he said that in an environment where there's growth risk and there's inflation risk, the 60-40 portfolio is actually vulnerable and incomplete. If we go all the way back to World War II, what we find is that the optimal asset allocation would have actually been a third into equities, a third into bonds, and a third into real assets like gold and silver. Now, in an environment like we're seeing right now, gold can actually provide real protection and preservation while consumer prices and inflation are skyrocketing. It's a shift in the market where investors really need to begin thinking about not finding real returns. That's going to be very hard to do in this environment, but actually looking at preservation and protection. Gold prices are predicted to continue to rise in this environment, and it may be the one place that investors can actually go to find growth as well. So if you're seeing your accounts fall apart, if you're concerned about where the economy is headed, and you're looking for ways to get that real diversification in your portfolio, I'm Makai Block with American Hartford Gold. Give us a call today and let us talk to you about how we can help you put gold and silver into your portfolio and actually protect it with what we're moving into with this recession.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.